Continuing with our session, next up we have Mr. KB Kachru, Chairman Emeritus and Principal Advisor, South Asia Radisson Hotel Group, moderating the Impeccable Operators. Mr. Kachru is joined on stage with Mr. Javed Ali, Senior Regional Director Operations, South Asia Radisson Hotel Group, Mr. Rohit, Regional Director of Operations, India Hilton, Mr. Vikramjit Singh, President, the Lemon Tree Hotel Company, and Mr. Vishvapreet Singh, Cheema, Director of Operations, Southwest Asia IHG.
Hi, very good afternoon to all of you. It's really great to be here. Venue is great, people are great, and really proud of what Dilip has done to our industry. I think, first of all, we all owe him a lot of gratitude to help us position where we ought to be and we should have a long time back. Thanks Dilip. I just met some youngsters, some aging youth, and senior citizens like me around, and it's wonderful to be here. Some of you must have been there last evening. We had a real fun evening, and Mano, his team, I think they all did a fantastic job, and I think we owe to something really big for somebody like Suresh Kumar. He really entertained us so well by creating, I never realized that we have that kind of talent also within our industry. It's, the topic given to all of us here is impeccable operator. I personally, if you ask me, to really be impeccable is actually a challenge. And I think quite a few of us, although we may not admit, we may not say openly, but the fact remains that we can't be as white as snow. We cannot always be perfect, but our objective overall is to strive for whatever best we can do. So I have with me here four gentlemen with a fantastic track record. You all know them. And I have Vikram here. He is head of Lemon Tree. Where I have Vishvapreet, IHG. He leads the operations there. I have Rohit. He is doing a wonderful job for Hilton and handling the operations and regionally managing the whole thing for them. And Javed, who also happens to be my colleague in Radisson Hotels. He has a mixed portfolio, but looks after operations of most of our hotels, and over 60 hotels. Thank you, all of you, for being here. What I felt that, and while I was coming, I heard that, lots of stuff, a lot of good things have been discussed since morning, and quite a lot of focus has been given to pandemic, technology, and talent. We all are facing a huge problem for talent, and probably that's one of the reasons why Manav and Dilip must have decided that we should do it at the school to make industry feel as to what it is. And following this session, we have a special session for that. I have colleagues here, Yogendra and his team here, who would be talking more about him. I'd like to focus, I will ask a couple of questions to put the little spark in the mind of everybody so that ultimately we get into a conversation rather than me kind of putting up questions, listening to their answers, and then we winding up and saying goodbye, thank you. I hope you got enough sermons from us. So that I would request our audience to be participative. Please feel free to ask any one of us what we feel, what we are doing right, kind of when we are actually impeccable, and what we are not doing right to be there. So we'll start with that, and I hope all of you will enjoy and ask us. Rather, I'm not using the term, some of my colleagues told me that, is it a grilling session? I said, I'm also afraid if I may be grilled by everybody else here. So I want this to be a good conversation so that we understand each other better. So I'll start with you, Vikram, if I can just see you properly. So, Vikram, you actually joined Lemon Tree during a very difficult period, pandemic. I actually don't want to talk about pandemic because I heard everybody has been talking about it, and it was a very, very difficult time. You joined. I want to hear from you. What kind of challenges did you face when you took over during a very difficult time, and how did you handle them, and what kind of priorities did you have to tackle those?
Thank you, and it's an honor to be here and to be addressing people in person and not be on a Zoom call, on a virtual platform. So thank you. So let me tell you, the pandemic, what I think was the biggest teacher that we had in the industry. If you ask me, we were actually suffering from the curse of success. Not just, I'm not talking about my company in specific, but in general. We got back to all-time high occupancies. 2019 is when India occupancy crossed 65%, which means that you are approaching top of cycle conditions. So everything was going very nice. And with that, a lot of flab got built in the system. And the pandemic really taught us that, we could do away with probably 30% or 1/3 of our costs, which we didn't need. And today, we are actually surviving, or not only surviving, but thriving and doing similar or better revenues, much higher ADRs. And if you were to look at the results of all listed players in quarter 1 of this fiscal, everyone's reported an average rate increase of 16 to 29% across brands. And I'm talking about the listed players, this is all in public domain. So we are actually charging the guest much more, on an average 22% higher. We are doing similar occupancies, but we are doing that with a cost structure which is 30% leaner. So I don't think there was anything better that could have happened to the industry. Of course, short-term pain, 2 years was misery. We saw near death. But the long term, I think this is...
We survived it.
We survived, and all survivors will laugh the way to the bank, if I may say so now.
Okay, Vikram, connected with what you said, you talked about ADRs, you talked about occupancy. Most of these are measurable, okay? How do you handle your own self, your team, looking at things which are not measurable, which really help you deliver better?
So I think, and the credit here goes to the chairman of the company that I work for. When the pandemic started, there was a complete destruction of revenue. And as a company, we took a call that we will not ask a single person to go. We will share the pain. So of course, there were salary cuts across the board. The higher the band you were, it was a larger number. But we were very clear that, everybody will share the pain in this together. So that I thought is a big learning that we had during that period, is that we are in it together. We will go through this together, and we're all...
Great, great. Thanks, Javed. As I said a little earlier, that you have a mixed bag of managed contracts, managed partners, and franchisees. Now I want to hear from you. is GOP, scale, or something else your priority?
Good afternoon, everybody, and it's really a pleasure to be here. Congratulations, Mr. Puri, on a fantastic setup. And I think before I answer your questions, I'll just take the liberty of saying a couple of things that you said about the cost of education. I think it's invaluable, so I don't think you put a rupee value to it. That's my sense. Nice coming from a fellow who hardly ever went to college, but that's one of the regrets I have. Now, in terms of what we are here in business for, whether it's a franchise or manager, I'm one of those characters who was there when the company didn't have as many hotels as it did, and I was running a hotel. I was managing the hotel at the end of the runway, which happened to be a franchise, but the owner also owned half of the management company. So I sort of learnt both sides. And for me, it was a very steep learning curve on what owner aspirations are and what kind of results they expect and level of detail that an engineer owner who happens to go into. So it was a fantastic learning experience, and of course, we had professional mentors as well. So I felt I was a custodian of the brand. It was therefore easy for me to make a transition into managing relationships with a mixed bag. And of course, it also helped that I hosted, as a general manager of the hotel, all the new ownerships who happened to sign on with the brand. And so I had a personal rapport with them. So I think, your personal rapport and the level of confidence that you can repose based upon the kind and quality of operation that you run, it helps build your credentials. As to what you can do and of course it's never an individual, it's always a team, and that's the beauty of our profession. It's the team who makes you look much better than you actually really are. So I was very fortunate in that. I think in terms of delivery to both sides, I think one thing we learned was very quickly was how to think like an owner. And that's a big difference, because if you don't own the asset and you're managing the asset, you're actually an asset manager in every sense of the word. So whether it's adding value in terms of the profitability or the reputation of the hotel, what does the customer think? What does the world at large think of my hotel? What do people working here think? And also management of the talent and property upkeep and maintenance. And then being able to form ideas and to be able to express them well. And get them understood and see the value, portray and be an ambassador of the brand, and see how a brand can be leveraged by a general manager. And it's the general manager who really does this. All of us sitting above property can talk, but it's the general manager who gets believed. And if he says it's good, it's good. If
But
he says
Javed,
it's bad,
what was your real priority besides scale? You getting ownerships in, doing a dual role of actually operating, managing, and yet convincing them about the brand. Okay.
Yes.
But besides this, any other priority?
See, it was not just one. It's always, for a general manager's life, it's always a set of priorities. And I think that you have to find the right balance. I always say that. You have to keep, and there are 3 or 4, and that balance scorecard, which all of us are familiar with, shows how good, bad, or ugly you are. And it doesn't remain the same. So during the day and during the week or the month or the year, you keep shifting around to rebalance. And that's really what I learned. And that's what our owners expect.
What are the key challenges you face in owner-operator relationships? We say we want an impeccable operator. What do you think would one make it, and how can one make it impeccable? What the industry thinks, what an owner thinks. Just top 2 things.
I think, one is the brand promise. So the brand promise, whatever the brand be, that brand promise has to be received by all stakeholders, whoever they happen to be, whether they're owners, whether they're people working in it, or the customer. So whatever the promise is, you got to deliver that. And I think there is always this question. I think what you're driving at is how do you convince people to do things they would not normally want to do? And I'm talking about our owner community. So yes, how it works is that you've got to believe in it yourself. Do all the questions and answers that you do before you go to them. And then once you believe it yourself, then you are in a better position to talk about it and to represent it and get it done. And of course be responsible for the results or the fallout. If it's not good, it's always your fault. And if it's good, then it's everybody else's, should get the appreciation for it. And by that I mean the team. And of course ownership as well. Because at the end of the day,
I'll
these are
come
the
back
people.
to you later on a difference between a franchise and managed hotel. But let me ask Rohit first. I think about a fortnight back, I read an article where Dilip had given a statement that hoteliers need to focus and understand technology is an enabler, not a replacement. A lot of debate has been going on. To what extent can we stretch what? So, any opinion, and how do you think it is executed, not only in your company, your view, overall view in the industry?
I think first and foremost, I agree with him. I think it is an enabler, not a replacement. But having said that, it is also a big debate. I mean, within our own system, within friends, hoteliers, general managers, there is a constant conversation as to how much should technology replace or enable. And whenever you have these conversations, this is my personal belief. I'm sure some people agree and some people don't. But I personally believe that at the end of the day, the business that we're in is hospitality. Correct? That's what we call it. It's basic innkeeping. How you welcome a guest, a clean bed, a clean room. He has a bath in the morning. The water should be warm if it needs to be, or cold. A good breakfast. He checks out. A fond farewell. So those basic things, manage expectations, warm welcome, fond farewell. Now that basic I don't think is ever going to change.
Okay.
Now, to help us do these things better, the speed of decision making, the efficiency with which you do them, I think technology will help and continues to help in a big way. I think our investment in technology, a lot of people, I've heard this spoken about even when I was a general manager, is that use technology so you can reduce manpower. I think the purpose of technology should not be to reduce manpower. I think it should be to increase efficiencies. If efficiencies make you become leaner, great. But the purpose should be different. So the intent has to be that technology for me is something that helps me become more efficient. If efficiency becomes a leaner team, like Vikram also said, that the entire cost base, not just people, but overall cost base becomes leaner, then it's great. Technology should be incorporated in everything that we do. But I also believe that it's also transactional. Like for example, if I know that there's a point in time in a business hotel at check-in, it's not going to be the same thing as a leisure hotel at check-in. So I may be able to use technology or no interaction in a business hotel because a person's more about speed rather than interaction. But I may never be able to replace that in a restaurant, for example. So I think it is bound by the kind of service you want to deliver. I think it's bound by the kind of cost you want to incur.
Balancing act.
I think that's what it is. But it is at the end of the day, like Dilip said, an enabler, not a replacement in our business. This is my belief.
Thank you, Rohit. Thank you. Rohit, you have been fortunate enough, along with quite a few people here who actually started with OCLD and who worked with Oberoi's and moved on. You also, after exiting Oberoi's, if I can use that word, you joined some other companies, international brands. Moving from an Indian company which is in the luxury segment to an international brand which has multiple brands addressing multiple segments, do you think there is any change in your own thinking how to deal with such situation?
Lots. This is not a question that's not been asked before. But the question has always not been asked in the same manner. When I first left Oberoi's and joined a company called Oakwood and then Marriott, one of the few questions I used to get asked were, "You left Oberoi's?" That was how it was asked. And my answer used to be actually very truthful and very simple. I spent 18 years with the Oberoi Group, hotel operations as well as training and development, OCLD. And then when I left, I was a general manager for a small unit, which is part of the Prestige Group, Oakwood, and then I joined Marriott for many years before Hilton. But I think one of the things that I keep telling people, and this is true, maybe not today as we speak, because both international companies and domestic companies are kind of changing the way they work, but that time it was definitely true. I learned the art of hospitality from the Oberoi hotels, but the business of hospitality I learned from the company that we work for nowadays. So the managed companies that we talk about taught me the business. You know, the way I looked at a P&L was different in the Oberoi hotels. And sometimes it's very clear, those days when you look at what you call a balanced scorecard today, KPIs or KRAs or whatever. In companies, and I don't say Oberoi is the only one, probably other Indian companies as well, the focus was largely on delivery of service, quality standards, not scrounging on costs to achieve GOPs. In the business that we do, I think your balanced scorecard is far more interactive. It's not just about one thing or the other. I don't know what's good or bad, but that's how it was. So the art was learned there and the business was learned here, and both are very important. And I think as we move forward and transit, I think what's happening today, if you look at both companies, if you look at Oberoi Hotels, they're beginning to, over the last few years with various leaderships, learn the business. And I think companies like ours, whether it's IG or Radisson or Marriott or whichever company you look at, we're starting to focus a lot more on quality standards, product quality and people. So I think it's a combination. Thank you.
So if I can just come in here. So just to bring a spin on what Rohit just said, there's a very interesting table on page 31 of the Trends and Opportunity Report, which is on display outside. It just tells you revenue performance of Indian brands and international brands. Do have a look at that, guys. And it's a 10-year table, so do have a look.
Yeah, I think we'll come back to that.
If I may add something, I forgot something I wanted to say earlier. In fact, I was having a word with Dilip also. This is very important. It's a very good thought. When we were talking about technology also, and he's got a good point about companies, but it comes from one fact. Technology is going to always be commoditized. People cannot be. So what's going to happen is if you maintain the people, the culture, the way you engage with them, things are going to change. To your point.
Thanks. So I think now we have our colleague here, Vishvapreet. He has worked all across the brands and has had great experiences. Vishvapreet, what actually have been your key challenges which you faced in the Indian market after joining international companies? I wanted to talk about the market, international companies vis-a-vis Indian companies, and how do you deal with them?
Okay. Good afternoon, everyone. First of all, kudos to Manav and his team for getting us all together, and heartiest congratulations, Mr. Puri, for this fantastic setup. So, if I understand what Mr. Kachru is asking me is, what are the key challenges that that international companies probably face when they are in the Indian subcontinent versus the domestic players or Indian homegrown companies? So I've had the opportunity to work with both. So I started my career with the Oberoi Hotels as well. So the strongest element that an Indian company does bring in is their in-depth knowledge of the Indian subcontinent, the culture that they have, and their penetration into the domestic market. They are very strong on those fronts. Having said that, over the years they've also built their brand value. So a lot of youngsters do aspire to be part of those brands. Having said that, international companies have been there for a very, very long time also. For example, IIG, the Intercon did come in the year 1966 with the Oberoi New Delhi, which is now the Oberoi New Delhi. So the existence of international brands has been there. So the footprint has been growing steadily across various brands that there are. I would actually add a flip to this. Instead of saying what challenges, I think what opportunities do the international brands bring to the table is what I would elaborate on a little more. First of all, international brands bring plethora of brand selections, various models for various market segments. So they're not stuck to one market segment. So whether it's luxury or whether it is mid-scale, upscale, or even in the lower mid-scale segment, they play in all fronts. So that's the opportunity, number one, that they bring to the market. The second that the international brands bring is state-of-the-art technology, because international brands generally don't invest into assets, physical assets. However, what they invest in is technological assets. So with high on technology, they bring that in-depth distribution system that helps owners who work with international brands to bring in their reservation costs down, to bring in their procurement costs down, and to have that market reach globally, which sometimes does become a bit of a challenge for domestic brands and their awareness levels across the globe. Hence, they do tie up with other marketing firms. The third point that I would like to state here is that strong marketing campaigns that international brands bring to the table also helps owners who work with international brands to achieve or reach segments that probably wouldn't be traveling to a particular destination per se, whether city or whether leisure, whatever it may be. So that reach comes into play. At IAG, we've got 6,000 plus hotels. So that itself sort of brings a perspective of how we leverage our scale and bring efficiencies and bring reach of customers to India. And that's where international brands sort of add value to tourism here. So that would be my submission.
Thank you, Vishvapreet. I would move a little ahead and ask you that most of the hotel operators, brands particularly, they're looking at scale, they're looking at growth, but they want to be, as you said, asset light. Why do you think in a country which has huge potential, 1.4 billion people, maybe our market is, even if it is 20%, 10%, you know, why don't international brands, I work for one, but I'm asking you, they believe in you need to put your money where your mouth is. You invest and reap later. So what is your opinion?
So if I may, international brands, it's not like we're not, so I'll just reiterate this sentence that I said earlier. It's not like the international brands are not investing into assets. They're not investing into the physical asset because that the owner has invested into the asset. The international brands actually invest into loyalty programs, for example. Huge, major loyalty program initiatives that do. For example, IAG has 100 million loyal members. So that itself is a big asset. Maybe virtual, but it is an asset. So we are in the tourism industry. We are in an industry where we serve guests, and if we have that loyalty platform where guests have the ability to benefit from going and traveling and staying at hotels and enjoy those benefits, I think that's the best outcome.
I got your answer.
So may I jump in also there?
I just actually was coming to Javed because I know Radisson is investing over $100 million in just upgrading the technology. What kind of impact do you think the brand would make after the new Emma is incorporated in the system?
Fine, thank you, sir. I'll answer that, but before that, I'll let me give you my sense of why it's asset light. Of course, the obvious answer to that is pace of growth and presence in and propensity or ability to be present and be first movers in most markets, which is something that all international brands are able to accomplish, some better than the other. But that's the objective, one, to be present. Secondly, to find a strategic partner, because there are varying qualities of partners, and you know, experience teaches you who you can work with. It's proven by track record. And then there's even investment in hotels per se, in the buildings, and more than that. Investment in technology, with Vishvapreet started on, and that you mentioned about. Of course, you know, there is certain comfort and convenience in having a common across the industry, or say property management system. So you somebody trained on it. It's easy to ask, do you know how to use it? And then, oh, you're welcome, come and use it. So it's just an adaptation, that's easy. But I think that also there are certain costs and controls associated with that, and also speed of response, particularly when you have a new billing regimens or billing tax regimen coming to play, and then the fee associated with that. Not that we're grudging any of it, but the point is that it's good to have your own capability in that. And since you, and of course, as a customer, and Radisson's been involved, for instance, in developing a property management system, it's called Emma, a play on every moment matters, which is you know, what we try to do. So what it does is that it actually provides relief and great value to ownership.
Understood. I think point very well taken, Javed. Vikram wants to say something.
So I just want to come in here. You know, the asset-light business is the highest HOSI business in our industry. You get the maximum return on your capital when you franchise the brand. So I think that's one thing that we have learned as Indian operators from the international operators. You know, if you take the example of my company, we went asset heavy to go asset light. We had to build the brand, therefore we built our own assets, deployed our own capital. But today, I think we built the brand, all Indian, there's some legendary Indian brands, and everyone's going the asset light way, because that is the most profitable part of our business. It's to, leverage your brand and get the highest returns. So it's.
Let me ask you again a little spin in what you are saying. You know, you have been very successful. I think we all acknowledge here that you were able to create a very good mid-segment, upper mid-segment model. Grown in India, very well accepted, and you delivered it very well. Now we hear that you have a lot of focus in moving to the premium segment. When you have established yourself in a particular one, why there is a dilution in your own thinking, or is it you aspire to be somewhere else after some time?
Good question, sir. So I'll tell you, we are a relatively new company. The first hotel opened in 2004. The company is only 20 years old. And if you look at all international brands, they've got 30 plus brands. So I think we are in a stage of an evolution. And to give you a financial answer to that, we've been able to establish the best-in-class cost structure in the mid-market. So we said, why not try that similar cost structure in the upper upscale space and see how it works. And honestly, like I said, if you're going asset light, the real chunky management fees that you get are in the big boxes which are in the deluxe space. Yeah. So why not?
No, very good answer. I think one of you spoke about no-touch option. When we're talking about technology, and we were discussing amongst ourselves that we are moving towards people feel more safe, secure, with no-touch option. And do you think we are going a little overboard on that? And Rohit, I remember you telling me a little earlier that you can't apply the same rule uh, if it is a leisure segment. I mean, expectations are different to a business hotel. Now, what's your view? I mean, any one of you can answer. What is your view that on one side we're saying create experiences. Primarily, it is driven by a leisure because of the domestic market we have had. I mean, that's helped us survive, all of us survive in the last 2-3 years. But on one hand, when we are saying create experiences, give better things, incidentally, I just read another very nice piece written by a senior colleague about how to create experiences, even if it is a little thing. I think, if I recall right, it was in one of the Taj hotels in Varanasi. A guest was checking out, and when the guest was checking out, doorman opened the door, but he didn't close the car door for the guest. The general perception is that doorman is not closing the door because maybe expecting something. But he was waiting. After his observation, he told somebody, this guest has forgotten to take Ganga Jal from the hotel. They give it to every guest, a little bottle of Ganga Jal, because you have come to Benares, you come to Varanasi, they distribute. So one side we're creating such good experiences. On the other side we are saying no touch option. So I just want your feedback on that.
I think everyone has an option, but I think if you look at it, at the end of the day, it's about managing expectations. This pandemic happened, everyone expected that we shouldn't have a lot of touch, there should be distances. Look what's happening today. Those things are moving away. I think it's also, all of this bespoke experiences, curated experiences, it has happened because the expectations have also changed. I think at the end of the day, it's all about the expectations and the perception that a consumer has. And I think it's going to be market to market, hotel to hotel. We've learned a lot about how to do that business. When you have a business hotel that used to run 70% foreigners and now it's running on 100% Indians, the entire methodology changes. The way in which you
The whole
approach
ballgame has changed.
Absolutely. And that's going to continue to happen, I think. So that ability to change your mind, or not change your mind, but be nimble about decision making, I think that all of us have learned. And whether it's curated experiences or no touch, I think it's still going to be dependent on what the guest expects. That's my thought.
Okay, one quick question to all of you before we will involve our audience if they have any questions, is I want each one of you to say the best decision you have made as an operator and the worst decision you have made as an operator. Javed, why don't you start?
The best decision, I think, was the most recent one. And of course, as we struggle to survive, I think the nicest way that I was probably one of the contributors to this idea was to try and save livelihoods. And that's pretty deep. It's not just livelihoods of ourselves or our staff, it's also livelihoods of everybody concerned. So that's the way we portrayed this, and everybody, it resonated very well. So I'm glad that worked well. Worst decision, thank you. The worst decision, I think, was, becoming too cocksure. I was, at one point, running that hotel. I was the general manager of that, and there have been many poor decisions, but this is the one that sticks out, because we were top of the cycle, and I thought nothing would save us, and I failed to see the future and the signs, read the signs, when we should have corrected rate, and I got a lot of egg on my face for that back around 2008 or so. This is all the competition in
Thank
the
you.
city. Thank you.
Thank you. Rohit?
I just feel as a company currently, Hilton, one of the best decisions, if you ask anyone of us in the office, is that we start in the last few years, and one can see the investment that we have put in people, whether it's at the regional level or at the hotel level, has been enhanced over the last few years.
Okay.
I think it's just a question of being future ready and not looking at how many hotels we have currently, but how many we aspire to have. I think that's the thing. So that's
First,
I know we didn't want to talk about this, but honestly, if you ask me, and we weren't as forward thinking as Lemon Tree, but I think one of the worst things is, or regretful things, is losing people. We tried to get as many back as we could over the last 1 year, but initially losing people, I think, was very regretful.
Vishvapreet, I've been given that Ghanti, we need to quit.
Well, the best decision I think IHG has done in recent times is that they've invested into upgradation of the loyalty program. So we've got the IHG One Rewards that has got launched earlier the year. So and the core obviously of this revamp is that guests are our livelihoods, right? So we need to make sure that we deliver to their expectations. So hence a revamped program which has obviously been accepted well. So it's a big positive. Worst, I would actually talk about a personal one.
Yeah, okay, sure.
I think
Quick one.
Not investing into my own self-learning in the past couple of years when I had the opportunity. I think that's a big takeaway. So I'm going to do that. I've already sort of enrolled, so I'm going to do that next year.
Good to hear that, admitting that what we need to do. Vikram.
So I've spoken about the best decision. I think the way we handled the pandemic, especially when we said we'll share the pain and not ask anyone to go. The worst decision, by the way, is also the same, is that why did it take the industry, a pandemic to learn better ways of doing business, a more efficient way of doing business. The new cost structure could have come earlier. It didn't take a pandemic for us to teach that. So
Fantastic.
Thank you.
Just one or two questions from the audience, if anybody has. Oh, sorry. Who would like to take the first question? We have a couple of minutes, so. Yeah.
May I take the first one?
Yeah.
We actually, what happens? So basically, it is what happens if it happens again. So there were actually, so far we've seen 3 discernible cycles. There have been more, maybe more, I don't know. But the 3 discernible, the first time got hit for about 3 months in terms of, getting back into business. Second time, it took about 1 month. And the third wave, it took just a week or so. So I think all of us are learning. And it's not just, one company. It's not unique to this company, the one I work for, but it's everybody. And I think what we did was leverage the scale that we had to help hotels that didn't have the strength to shore up operations.
Yeah. The second one, quick one. I've been told to, move on.
Okay, I'll take the second one. How did you manage your owner relations during pandemic? So one thing that we did was we were in touch with the ownerships every day. We were having discussions, and we did not take any decision unilaterally. We worked with them. We understood what pains them, what is the challenges that they're facing. Some of them had taken loans, some of them had issues in terms of financials. So whatever it may be, we work with them, and I think that's what sort of helped us move through.
Yeah. I think all done. It's actually, we have discussed this on the asset, so I take the privilege of thanking panel. Thank you, Vikram. Thank you, Vishvapreet. Thank you, Rohit. And thank you, Javed. And thank you, all of you.